2024, we did the best market measure, part 1 yesterday. We are doing part 2 today. The best time of the day to buy and sell. Does intraday seasonality exist? Statistically, which 5-minute bar is the weakest during the day for the S&P 500? Using 15 years of market indices and futures, ETFs, 11 years of VIX, we first convert the 5-minute price and volume bars into an intraday percentile. Then we calculate the average of these percentiles for each symbol to get their intraday strength, as well as their monthly and overall strength. What we found was that low AM and high PM rule. Market indices tend to be lower in the morning and stronger in the afternoon. Buy them now, Bat.
That's right. Buy them when you can.
VIX tends to be higher in the morning and weaker in the afternoon. Yes, as time goes by, there's less risk.
Sure.
Now, I'm going to say something about lower in the morning and higher in the afternoon. That is a very typical byproduct of bull markets. In bear markets, it's the exact opposite. So don't get fooled by the bull market, bear market thing. The reason that the last 15 years, we've been in a bull market. And in bull markets, you open lower and go higher. In bear markets, which we haven't had for a long time, you open higher and go lower. So this is a bull market phenomenon.
Mm-hmm.
But we did study this because this is, remember, the best of 2024.
And 2024 was a bull.
Yes. And on average, the best time to buy the dip or manage a short position is around 10:30 to 11 o'clock Eastern Standard Time, or that would be 9:15 right now to 10 Central Time. It's when the market is weakest. Right now, Bat, close your eyes and buy them. This heat map shows weak in the morning, strong in the afternoon for market indices, and it shows the exact opposite for the VIX. The greener, the higher the price of the day. So that's all that is. Just it's a heat map. For all market indices and VIX futures, the average 5-minute percentile crosses around 12:55 Eastern Standard Time, which is noon in Chicago. The VIX surrenders around 1 Eastern Standard Time because they're inversely correlated. This is noon in Chicago again. This is why you got to be careful with those zero DTs and the upside risk at the end of the day in bull markets and being long volatility going into the end of the day. This is a U-shaped volume curve. In the middle of the day, it's lowest, and the market volume decelerates from morning to noon, and then it reaccelerates in the afternoon. This was a fun piece. And that's why we like to trade when it's busiest, morning and close. But to be fair, it doesn't matter much anymore. Let's go to the next slide.
It doesn't matter much anymore because of technology.
Yeah, technology has changed that game dramatically. The possible theory behind the buy the dip morning momentum. Lighter volume, easier accumulation. Nah, I know what they're writing here, but I don't like it. I think that the reason for it is that it's just simply a bull market phenomenon. There's also an argument that there's macroeconomic data releases and that lighter volume means easier accumulation, but I'm not buying it. Volatility tends to peak in the morning and decline in the afternoon. Fear is often overstated, and as the day goes on, people become less fearful. It's like anything else. You hop on a roller coaster, you're scared to death. Once you get up to the top and you start going down, you're like, it's nothing.
You hop in a Waymo. You're not so sure about what to expect. There you go, size enough. You just did it yourself. And you know what? In the middle of the ride, you forget you're even in a Waymo. And by the end of the ride, you say, you know what? I'm going to do that again. I'm not building any more bridges.
There you go. This is a correlation heat map. It's just a different way of looking at it. But it's the average price percentile on the time confirms a weak AM and strong PM. Again, this is a bull market pattern, and don't think that it will last into perpetuity. But until the market rolls over, so far so good. And the inverse for volatility. In December, we saw the VIX and the market act a little differently than it's acted the whole rest of the year. The rest of the year was
Sure.
really bullish. And we basically didn't have a downtick all year. But starting in December, we had a little bit more two-sided action. And actually the market's down a little bit for the last couple of weeks. So
that is true.
Welcome to a two-sided market, a choppy December. Can we predict what's next? Not really, but we know a couple things. We know that January tends to be among the highest volume months. Part of it's because of leap options. Part of it's because people come back after, they're all fired up and ready to go, clean slate, everything else. But January shows that the VIX tends to be strongest until around 10:15 Eastern time, and then it gradually declines. By 12:25, starting in January, the VIX is overtaken by all the major market indices and goes the opposite way. That's just the same charts we've been showing all along. Really interesting, though. Beautiful picture. How about February? Along with November, February is statistically one of the best months to buy the morning dip. And here's a little just historical evidence to that. These months often see the VIX morning bluff, early volatility, fade, creating opportunities. Over the last 10 or 15 years, we've had some really nasty end of January, early February, of which the market has started off weak and finished strong. The strongest average percentile of VIX 5-minute bars by month. And so we're looking, again, between that 10 and 11 o'clock Eastern time or 9 to 10 Central time, which is right where we are right now. Bullish trend post-2008 financial crisis, yes. We have been in a 15-year bull market of which you open lower and go higher. That's just the way bull markets work. Every day they try to scare you a little bit, and when the fear runs out, they buy them until your hands bleed. So timing of buy the dip, month specific strategies. Each month has its statistically best 5-minute bars, and then low AM, high PM phenomenon. The VIX has the inverse, but it has been very true from September to December. And the best months for buying morning dips, February, May, June, and November. I don't know how that's possible, but February, May, June, and November.
Who would have thunk?